All right, excellent. Thank you, Daryl, as per usual. Great intro. And just do a quick sound check here. Make sure you guys can see my slide that just says Urgent Futures Day Trading Crash Course, and should be good to go there. Excellent. Well, what I wanted to do, Raghee and I were talking about this, and this is actually a class that we had planned to do in August. And we were looking for a time when the futures volatility in terms of the stock indexes would be a little bit more volatile, which is an ideal time for doing this kind of thing. And then obviously over the last couple of weeks, we've said, okay, well, the volatility has actually shown up on our doorstep. And so we want to move this up and cover this stuff now, because these are the kind of tools, and I always say, like, this kind of stuff it's just market knowledge that helps out. And I remember in my trading journey, the time when I started figuring out, like, wow, how the internals move the indexes. And if I understood the internals and how that impacted futures, that actually impacted the stocks I was trading, it could help me time them better, which I thought was great. And then, so what I found, at least in my kind of trading journey, is that once you understand how to read the stock index futures intraday, how to read the market internals that drive the stock index futures, at the end of the day, it just makes you a better trader. Whether you trade futures, okay, it's obvious, if you're already into stock index futures, it's like, okay, I get that. But let's say that you don't trade futures and you have no intention of trading futures. Well, the idea here is that so go the futures, so go most of the stocks, which of course impacts any option trades we have on those stocks. When I learned to read the internals, I actually didn't even trade stock index futures for years because I was frankly scared of them. I always heard these things like, oh my God, this guy, he messed up, and then he had to mortgage his house to pay for his futures bill. But that was just from a lack of understanding. So what I want to go through tonight is just kind of show you some things that I think are some kind of good aha moments and kind of get you up to speed. So what we want to look at here is that we're going to dive in. We're going to look at some possibilities of what can happen when you trade futures. We're going to look at some specific setups, and then we're going to look at some internals and then some next steps. And then later on too, we'll have both Raghee and myself kind of doing a Q&A. I just want to kind of take you through this quick and hopefully informative kind of group of information to kind of get you up to speed on all of that stuff. So from there, I was talking earlier about, hey, let's wait till, July or August to do this. And mostly it's because we've had this unprecedented low volatility environment where, the markets just kind of keep going higher and higher and higher. And in this kind of environment, swing trading is the best kind of trading, meaning that you can buy and hold. And a lot of times you can do options on stocks, options on the indexes. You can also do futures, okay? But what happens is when the narrative of the market changes, as it has, suddenly futures become a lot more important. First of all, you can take advantage of day trading opportunities that frankly you cannot do with options. Why? Well, when you get stuff like this, what happens is the VIX explodes and it makes some option prices ridiculous. Like their premium is so jacked up and the spreads become so wide, it's hard just to take advantage of a simple intraday move. And a lot of times options they may trade 5,000 contracts on a day if they're liquid, whereas say the S&Ps would trade, 800,000 contracts on a quiet day. So the spreads are really tight, they're very liquid, and there's no premium, right? And so there's just, in this kind of environment, it's nice to be able to at least understand and be able to take advantage of moves like that, all right? So the goals and possibilities for tonight, we want to learn a high probability trading technique that you can use in large or small accounts starting tomorrow. Right. One thing that's nice about futures is that you do not have to, if you just have a pure futures account, there is no day trading rule, i.e. with stock indexes, you have to actually have a $25,000 balance to maintain that day trading rule. That doesn't apply to futures. The other thing that's nice about futures is that at the end of the year, you get a 1099 with all your trades, and it's taxed 60-40, 60% long-term, 40% short-term. So you don't have to enter in all the trades and stuff like that too. So that's a couple of sweet little things like that when trading futures. Also, especially with futures, there's definitely a focus on base hits and not home runs. And you'll see how quickly that base hits can add up. This increases your edge as well as your consistency. And then strategies that work even in small starter accounts, even in crazy markets like this. And then understanding and taking advantage of the tight spreads, high liquidity, and zero premium erosion available when trading futures. So first, what is possible? And with futures, there is the greatest opportunity to grow a small account into a larger account if you know what you're doing, okay? You don't have to worry about that 25K day trading rule that stock brokerages impose. Bonus, once you understand the signs of how and when futures turn, you'll be able to use that knowledge to time entries with options on stocks like Amazon and Facebook. So here we got a small account that could turn into a big account. Now, what's also nice is brokerages like Thinkorswim and Tastyworks allow you to integrate futures trading into your current account. So if you do that, it's actually a great way to hedge as well. So, and just to show you a quick trade, this is one that we did on Friday in the room. So, and this, the setups here are pretty simple. Like, oh wow, here's a squeeze. We broke through resistance here. Let's short. Here's our stop loss, and doing a couple of contracts. It's a quick $1,400. Okay, so it's again nice where you can just, when it moves from 6,800 to 6,780, you can capture that profit. Versus sometimes with an individual stock, because the spreads can be so wide in the options, that may just get you to break even. So it's a way to kind of dive in, get out, and get your cash. All right, so what I want to do is show you guys a couple of statements of what can happen. And I always say this is a disclaimer because trading futures is the riskiest thing you can do on the planet. If you don't know what you're doing, these results are not typical or consistent, and the chances of you doing this are close to zero. All right, so I don't want to give the impression that turning a small account into a big account is easy, but it is possible. So this is an account. You can see here it's I was planning to put like $10,000 or $15,000 into an account just to see what it could do, and sit there and then just kind of wait. All right. And the whole idea of futures trading, and I've used this analogy before, where you want to be like the cat sitting there waiting to pounce on its prey. In this case, it's a mountain lion. And mountain lions, they're not running around chasing, they're not chasing mice. Okay. They may see a mouse walk by, but they don't care. It's like, okay, there's a mouse, there's a mouse, there's a mouse, but there's a deer. Let's get the deer. Okay. And it's the same thing with futures trading. You don't want to try to catch every little tick. So sitting there waiting, like a week goes by, I finally get a nice day where all the internals line up, and in one day, I almost double the account. Okay. That's the kind of thing that's possible to do with futures. And then from there, and that's November 30th. And then a month later, turning that into $71,000. Okay. And so the idea with this is that you can sit there and just wait and pounce. And then over time, as you're using that leverage, it can grow $118,000. And then over time, you can use that leverage and it can grow, nearly $500,000. And so things like that are possible. And what you can see is you get a sense of, wow, here's once you start having, say a larger account, it's like, okay, you're using the same kind of setups you're familiar with. Here's a squeeze, right? Trading 80 contracts. At this point, it's up $30,000, and here's my targets. I can just lay them out there. And I call this is called the ladder approach, where when you have a target area, in this case, it was 55 up to 56. And by the way, I think it was like a Carolyn level. What you can do is what I call is just ladder out. So in this case, you put some contracts at every quarter point instrument, and it just ladders out and just sucks up the supply that you are providing to the market. Okay. So what is a contract? So good question. So if you're brand new to trading futures, one contract, okay, so one contract in options equals 100 shares of stock, whereas one contract in futures literally equals just one futures contract. So it's a little different. The way I like to think of it is that for the S&Ps, if you have one contract and it goes from 2053 to 2054, then that's a P&L change of $50, okay? And I think what I found is that reviewing the, the contract specifications of futures is confusing. But if you understand what they are in terms of a point basis, like, wow, the S&Ps, if I have one contract and there's 1 point of movement, it's going to be $50. $50 either in my favor or obviously $50 against me. Suddenly, that's not as scary. On the NASDAQ, it's just $20, okay? So if you have 10 contracts, that's going to be $200, okay, per point. So you can actually get these in such a way that I would say is that they're very, very manageable, okay? Now, that was a big trade, but you don't have to, you know, again, with a smaller account. So here's I'm a big fan of tick charts with futures. The reason I like tick charts is that with minute charts, like say a 5-minute or a 10-minute or a 15-minute chart, you know, if you've got a 15-minute chart, a bar has to form every 15 minutes no matter what, because it's based on time. A tick chart is based on the number of trades, okay? So if the trading is fast and furious in the morning, guess what? These bars will form quickly and any signals will form quickly. But if the trading is in the afternoon and it's slow, then, you know, where here each bar may form in a minute, here each bar may form every 5 minutes. And so with a tick chart, you actually get more accurate signals, especially with futures, which is nice. So futures trading explained. Futures trading is like having a session with your psychologist every time you enter the market, with the market being your psychologist. If you are developing bad habits, it'll let you know very quickly. I found that as a discretionary trader, you have to play tricks on yourself to keep it real. Otherwise, you can get caught up in the game of trading and forget why you're doing it in the first place. Okay, first is your goal to grow your account or to create income. All right, I think it's critical to do both, but you want to be aware of what you're doing. Otherwise, you can kind of get lost in what I call the video game of trading. It doesn't become real. I think the whole goal of trading is that instead of just getting caught up in these video game numbers on the screen, the key is to have a plan to turn your trading behavior, okay? Notice I said your trading behavior into tangible assets and experiences, because at the end of the day, it's your behavior that creates results, and it's your behavior that can turn your cash into tangible assets and experiences when you wire out those profits. And so you want to think about it in those terms. Now, the primary contracts that I like to trade are the S&P 500, which is $50 a point. The NASDAQ is $20 a point. The Dow, by the way, there's a benefit to trading the Dow because it has narrower spreads than the S&Ps. Whereas about 10 Dow points equals 1 ES point, the Dow spreads are actually $5, while the S&Ps are $12.50. So you actually put money in your pocket by trading the Dow. So it's a nice little feature there. The Russell, which I haven't traded as much lately. Bonds are always nice. So the bond, 30-year bond is 31.25 per tick, 10-year note, 15.62 per tick. Now, a couple things I want to point out here. This is generally a quiet market in the afternoon and is very good for, it'll bounce back and forth between the quarter point levels, okay? So for the bond market, you know, if the bonds, the quarter point level, so if there's 31, you know, 1 point is 30 seconds, right? And so if you look at the, a half point level is going to be the 16 level and stuff like that too. So if bonds are at 138 and 16 seconds, that's a level that can be faded. And so that's not a lot of people know that, but that's where all the big orders are sitting. So you can actually sit there and just trade back and forth at those quarter point levels on the bonds in the afternoon, and it's a nice kind of an easy trade to do. Crude oil is your momentum market, okay? This is like the fading market. If it breaks out to new highs, and as we'll look at the internals here shortly, you can decide whether you want to fade it or go with it. Whereas the crude oil, that's where the action is a lot of times. And you really got to, you know, be aware of what momentum is and stuff like that too. And same with gold and the euro. There's other contracts you can trade, but, you know, and you can just do the indexes too. If that's your, you know, it's like, okay, great. I'm just going to do, you know, the S&Ps and the NASDAQ. I have found that if you're going to trade, like say the S&Ps, The Dow gives you advantage as well because a lot of the algos and a lot of the computers trade the S&Ps, but they don't really trade the Dow. So you have less competition when you're trading the Dow, and even though it kind of mimics what's going on in the S&Ps, okay? And by the way, there are futures on Bitcoin. And so I've been starting to trade those more, and we'll actually look at some of that as well during our session. So for the most part, I'm not a scalper. And for me, a scalp is you're actually deliberately setting up a trade to try to make like 1 point, okay? So if I was gonna try to make 1 point on the NASDAQ, that's $20 per contract. So for me, I like to look at setups that have the potential to have greater movement than 1 point, okay? And there's a couple of reasons for that. One, and I used to actually lease a seat on the board of trade for the Dow, so my commissions on trading the Dow were almost nothing. But I always like to kind of give people a heads up on this. Let's say that on futures, you're trading $5 a round turn, okay? And that you have a $20,000 account and you trade 5 times a day and you're trading 3 lots at a time. Okay, not a big deal, right? Well, you're going to trade $75 a day in commissions, and that's $1,500 a month, and that's $18,000 per year on a, on a $20,000 account. So if you look at it that way, in your scalping, you actually almost have to make 100% just to pay the broker his commissions. So that's why I like to look at, I'm interested in more low cost, high margin business, meaning that I would rather do 1 or 2 trades where I could get at least 5 to 10 points, okay, on those contracts. I also, based on the internals, which I'll discuss here shortly, look for setups as well as occasional extraordinary situations. Now, one futures contract I did not mention that I also like to trade are futures on the VIX, okay, and that's actually a pretty solid one to trade as well. So when it comes to the futures trading, I'd rather do 1 or 2 well thought out, well-planned trades per day, meaning I consciously choose to miss out on a lot of the smaller action, okay? I'd rather wait for those 1 or 2 opportunities and can really nail it than try to catch every move. So that's some of the things there that I like to do. Now, I mentioned gold and a couple of other contracts. The good news is that once you understand the contract specifications, the setups are all pretty similar. You guys know I like squeezes. Here's some squeezes in gold futures. We got a 512 tick chart. Notice I'm not using an interval chart, okay? I found that it's imperative when you're trading futures to focus on those tick charts because they give you better and cleaner setups, all right? And then also what I like on futures is that it's much easier than options to manage the trade because of the tight spreads and because of the way the order platform works on many of these. So in a situation like this, and I can show you real quick how I'd manage this trade, where gold rallied up to this declining band, so it's resistance. So I wanted to short it. Okay, and what I'm willing to do on a situation like this is start off with a 2-point stop with a 1-point target. It's a high probability trade because a lot of times here, even if it is going to go higher, it'll at least pull back a point. Oftentimes it's going to come all the way to the bottom of the band, which is 5 points, right? But all I want is a point. So in this case, I start off with a stop, but the key with this is then how do you manage it, okay? Well, typically at this point, once it starts going your way, you can bring your stop down to just above the highs, okay? So even though I started with a 2-point stop, which was up here, as soon as it broke the low of the high bar, all right, and that's a key term that we're gonna come back to, the low of the high bar, I brought my stop to the highs of the day. So I reduced my risk substantially. And then from there, boom, it hits my target, and in this case, booked my $1,000. So that's something where I'm willing to wait all day for a setup where I can quickly book $1,000 like that. In this case, it was about 7 minutes. Okay, so what about the internals? So I learned internals the old-fashioned way, and that's by putting in my 10,000 hours watching the markets. And I know when I first started trading, it felt like that this was my first desk, where I spent so much time in front of my computer, I don't even know if I got up to go to the bathroom. So I think that's a pretty good idea for a new trader, learning to read the internals that way. And that way you save a lot of time and it can make yourself very efficient. So a large part of what dictates my intraday trades is determined by the action of the key intraday indicators that I like to watch. And they are as follows. So we have the tick, we got the VIX, we got the ADD, vol spread, trend, and the combined equity index put call ratio. So I've been making charts, taking screenshots for the 3rd edition of Mastering the Trade, which I've got to do those a lot of times in black and white, which is, you know, that's not really my style. I like the color charts. So it's been interesting. I've had to create black and white charts like this one and then recreate them in color, because now at least there's ebooks with the Kindle version. They said they could do color. So great, twice as much work. But it does kind of help me sink in and really look at stuff. And so a couple things on here that I want you to see. So we've got the tick. Notice the 5-minute chart. Then we got the VIX, ADD, PCVA, vol spread, trend, and then of course here's the spiders. So a couple things here that we want to focus on. All right, the tick, that's the NYSE tick, and that measures the buying and selling pressure. Okay, here is a 5-period moving average of that, and I'm going to talk more about that shortly because that's really important. The VIX, of course, also known as the fear index, essentially, if it's dropping lower, it means fear is abating. So we're going to see, in this case, the ticks and the market rise. The advanced decline line, of course, shows the amount of advancers over decliners. And you can see today that it was actually below 0 all day long. And a lot of this was due to the S&Ps and due to Walmart. The put call, the combined equity index put call ratio to me is very important. You'll notice here that I've got 1 circled. Anytime we actually rally to 1 or above, it tends to put a floor in the markets. Okay, and so today we were rallying, but the put call ratio was not rallying in kind. What we want to see is that if the market's rallying, is that this goes up above 1. That means that people are shorting the heck out of the rally and they're about to get killed. Instead, what was happening is a lot of people were buying calls today, and we ended up rolling over into the close. So it's a really valuable tool to get a sense of what is the marketplace thinking? Okay, what is, in general, what is the marketplace thinking? And I'll show you a couple things here. In fact, let's get this here and go back to last week, and you'll notice right see there, on a day where 822, oops, that's a little far. So on a day where the put call's over 1, you'll notice that it tends to, you know, 1's kind of an extreme level. But you'll notice like this. So on a day like on the 14th, and the put call is staying over 1 all day, look what the market did all day long. Okay, it's because people don't believe it and they're shorting. Those are the kind of days where you can continue to rally. Or if we see on this particular day right here, which is amazing, is that, yeah, we had the put call over 1, and yeah, the ticks were going crazy, but once once we saw the 5-period moving average cross plus 500, the markets rallied all day. Now this chart doesn't do it justice. The S&Ps actually rallied 80 points from the lows there. So little things like that can really, really make a difference in the results, and that I like to look at. And so for today, you know, one of the things I was looking at is, okay, wow, Amazon is rallying, but stocks like Facebook aren't. Walmart's getting killed. But the narrative of the market right now is that everybody's bullish and everybody's buying calls, which isn't sustainable. So for tomorrow, you know, if we wake up and the put call is actually over 1, you know, if we gap down and the put call goes over 1, that's very bullish. If on the other hand we're rallying and this put call ratio falls, it's very, very critical that you pay attention to that. All right. Also, too, you can see that the vol spread today was essentially just kind of dropping all day long. And so not a real clean market overall. All right, let's come back over here. All right, so learning to read the internals correctly is what gives traders an edge over everyone else. And so your goal is to determine what kind of trading day it is. So what do you guys think of the 3 types of situations that we're looking for? Just type it out. Your goal is to determine what type of trading day it is. So what do you think? We're trying to see, is it going to be an uptrend? Okay, downtrend? Or is it just going to be a choppy day? Okay, now obviously, anybody, once the day, once the market bell rings, it's always easy to tell what kind of day it was. But if you can tell this in the first 30 minutes, it gives you a big edge. Typically, if it's going to be an uptrend, all right, so here's the 0 line in the ticks, and here's the first 30 minutes. Typically, you're going to spend the first 30 minutes 90% of the time above 0. If, on the other hand, the first 30 minutes, 90% of the time is below 0, the odds are very, very strong that you're going to have a downtrend day unless what? Unless the put-call ratio pops up over 1. Okay, so when you get a big gap down open and the put-call ratio goes over 1, that's going to be a reversal potential day. Okay, so those are the kind of things that give you a huge edge, because nobody in the media, nobody in the news knows what's going on. When there was that big day down, big down day last week on Monday, the 5th, nobody in the media knew what was going on. It was only after the fact when people started figuring out that these inverse volatility funds were blowing up. However, when you're looking at the internals and going like, my God, the put-call ratio is staying low, the VIX is exploding, the ticks are trading at minus 1,400, you don't need to know that something bad is happening, okay? You just know that something bad is happening. Another thing that I like to do is to use audio alerts. Now, I have found that putting audio alerts at plus and minus 600 can get a little annoying. I have 3 young children. If you've ever had young children ask you lots and lots of questions over and over again, that's kind of what it's like to have audio alerts on plus or minus 600, because plus or minus 600 can get hit quite a bit. So I actually move mine to plus 1,000 or minus 1,000. And then that's when I want to start really paying attention to what's going on in the ticks. So a couple of tips that you can use here. So with the ticks, plus or minus 600, okay, is noise and can be ignored. So if you're sitting there and you've got a position on and you're looking at the ticks, and you're like, oh my God, the ticks are coming up here, I'm short, and ticks are at plus 600, there's nothing to worry about. That's just noise. There's no conviction there. And that's what we're looking for in the ticks, is conviction, okay? So that's not conviction. What I want to do is pay attention is if we get plus or minus 800. That's really the threshold. Like 800, that's the entry up to 1,000 and beyond. And or minus 800, that's the entry to minus 1,000. And that's a heads up for potential action, okay? So a couple things I want to point out here is that what happens when we get this plus 1,000 tick reading is that the first time that happens in the day, it is a fade. Okay, what does that mean? A lot of times we'll be coming along. So if the first 30 minutes are choppy, all right, and there's no direction, so we're a little bit above 0, we're a little bit below 0, there's no direction on the day, and then say like at 10 o'clock Central, you get a plus 1,000 tick reading, you short it, okay? That's typically a probe, and it'll quickly die. Or your first 1,000 tick reading, you buy it. What's different is that when you get, and I'll show you a couple of tricks to kind of see what's going on there, is that when you get, if you come up to get a plus 1,000 reading, okay, and you come back down to the 0 line and then you make new highs, you do not fight that. That's the start of a new potential trend, and you want to stay on board with that, okay? So same thing, if I'm long, let's say I have call options on Facebook, or let's say I have put options on Facebook, and I get a plus 1,000 tick reading, okay, it's like, and it comes down to 0 and then makes new highs, I'll just close out my trade, because I do not want to fight that, okay? That means I'm fighting the market. So for me, even though it may not be at my stop, that's a signal to me that I'm the wrong side of order flow. Now, if my position in Facebook is based on a weekly or a monthly chart, and I've got option, I'm planning to hold it for months, okay, I'm not going to worry about that. But if it's a day trade or a trade that I'm only planning on being in for 1 or 2 days, then yeah, that's something I want to pay attention to. Those internals can guide me through it. Okay. And same thing here. If I'm short, and in this case, get the same thing there, then it's just the opposite is true too. Okay. So we want to take a look at that. And another key with this is just kind of like, all right, how much time is it spending above or below zero? So for a tick fade, this is kind of how it looks. And it's easy to see it as a chart here. So if you look at this, you'll say, okay, well, in this case, the ticks were quiet all day. Markets weren't doing anything. And here, boom, we get a plus 1,000 tick rating. So in this case, the Dow futures, you can see they just they get a lot of action and then just kind of fizzle out. All right. And then we get another one, they get a lot of action and then they just fizzle out. Okay. Now, remember what I said, the strong ones, what happens is it comes up, pulls back to zero, and then makes new highs. That you don't want to fight, okay? So here we pulled back to zero, and then we just kind of went back to where we were, all right? Pulled back to zero, and then just kind of went back to where we were. So for tick plays, these are the parameters that I like to use for those tick plays. So we'll use the S&Ps first. So typically for the S&Ps, what I'll do is I'll have a 3-point target and a 6-point stop, and then a 30-minute time limit. Okay. Again, that's the first extreme tick reading on the day. If it's the Dow, then you can use a 30-point stop or 30-point target, 60-point stop, and a 30-minute time limit. So by the way, P&L wise, these are exactly the same. You may be wondering, why are you risking 2 to make 1? This setup actually has an 80% success rate. So if you're risking 2 to make 1 with an 80% success rate, that's a 50% annualized return on that, all right? If my stop or target is not hit after the time expires, then I just exit the trade at the market. So that time limit is important. If we go back and we look at what was going on here, you'll notice that it's like, okay, here we pop up and we kind of fade, but we don't get that 30 points, okay? After 30 minutes, nothing much is really going happening. So you just get out with your plus 10 points there. Here, on the other hand, you do hit your target, okay? And here, you have to also get out early as well. Because what can happen is after 30 minutes, after 30 minutes, it can gear up and go for another run, and you don't want to be in the trade at that time. And then the other part of that I think is important too, is that only take trades between 10 a.m. and 3:30 p.m. Eastern. Okay, so that's if you're Central Time like I am, that's 9 a.m. to 2:30. So the first 30 minutes of the day and the last 30 minutes of the day, I'm not going to be fading ticks. There's just too many weird things that go on like that. Also, if by 10 o'clock Eastern, the ticks have spent over 95% of their time above zero, okay, then I'm not going to do any tick fades, all right, or vice versa. So, if the first 30 minutes of the day, the ticks are above zero, and then we get a plus 1,000 tick reading, I'm not going to short that because the ticks are already telling us that there's conviction in this market coming right out of the gate, okay? Also, too, this is the best trade setup for choppy markets. So if you do get that first 30 minutes of the day, okay, here's the ticks and here's the zero line. If that first 30 minutes of the day, we're in between plus and minus 600 and we're spending, give or take, equal time on both sides, I get really excited about a tick fade on that day because there's a lack of conviction and a lack of direction on that day, which sets us up for fading opportunities, which of course is fantastic. And then this is an example of extreme negative ticks. So when you get something like this, where the first 30 minutes of the day, the ticks are just down, well, guess what? You're not going to do any tick fading that day. You're just going to go with it. And conversely, if the first 30 minutes of the day ticks are above zero, you're not going to fade on that day either, because the market's telling you very clearly early on in the session that it means business today. Okay. So, and again, super simple rules here. So here's, if you guys are having problems with this, remember slide 34, that's the checklist. So when you get that first tick reading, you got a 3-point target and a 60-point stop and a 30-minute time limit. And I'll show you a couple of other things too that can make it kind of simpler for you. See there. And you'll see here on something like this, you have a nice quality time day with plenty of fading opportunities. Okay, so again, the first 30 minutes of the day, you can see the ticks were spending time above and below zero. So any extreme tick readings were a fading opportunity versus the first half hour of the day being very, very positive. Then you're just going to focus essentially on buying breakouts and buying the dips on that. No, a 6-point stop on the S&Ps. So the tick rules, plus or minus 600 is noise. Most tests of 1000 are a spike and can be faded as long as those criteria for the first 30 minutes are met, which simply is that it's spending quality time both above and below zero. Sustained moves above 600 should not be faded and instead are an indication to go with or to hold on. Now that I know is vague and is probably tough to do unless you've had a lot of experience looking at the internals. And so I found an easy way to do this. And a really easy way to do this is to use a 5-period simple moving average and stick it on a 5-minute chart. So how does that work? So the moving average on a 5-minute chart, and I'll show you the chart here in a second, a 5-period moving average on a 5-minute chart of the tick. And what happens is that you really want to get a feel of where the ticks are hanging out, okay? Because there's a big difference between a spike over 1,000 and then hanging out at these levels. So what I'm looking at for the 5-period moving average is that does it cross the plus 500 or minus 500 levels? So let's actually look at that and see what that looks like. So if we look at the action today, okay? So here is, and we have the spiders right down here. So you'll notice that here's some ticks and things like that, but there's a purple moving average, and I drew a line here at 500. So we go along here, and that, early in the session, there's a little bit of weakness, but we never cross the minus 500 level with the moving average. And then we get a really strong rally, but we never cross the 500 level, okay? Later in the day, we do cross, and that's when we really get some real selling, okay? And so what we're looking for in a situation like that is there strong and consistent institutional quality pressure on these markets? Because when you get that stuff, that's when the big flushes come, all right? And so I found that that's something that's very, very useful, especially in volatile markets like this. And I've got a couple other examples here too, but I've just found that a lot of times that can be something that's easier to work with as well. And then let me grab these. All right, there. Okay, so, and the sign is $ TICK. TICK. Yeah, and you guys will get a copy of these slides too. So reading the internals. So these are the moments that define a trader's job, which I equate to sitting under a tree with a fully loaded gun, waiting for your next meal to walk by. When we chase mediocre opportunities out of boredom, we squander our bullets, both our real and psychological capital. By the time our prey comes walking past the tree, we're out of ammunition and miss the opportunity. And so what I found is that the internals help us to be patient, help us to know when to pounce, those combinations that we want to look at. Because what happens is when we're out of ammunition, and that could be out of money if we squandered away our cash, but more often than not, we're out of psychological capital, meaning that we are mentally spent and unfocused, so we miss the signs and miss the big move that comes along. So you've got to be patient. All right, so a couple of other tools here that I really like, and these are tools that we'll be talking more about on Saturday during a class that Raghee and I are going to do together. So these, if you're familiar with Darvis, and this is so on the NASDAQ, I like to use the 987 tick chart, and you'll notice here that I've got the squeeze and some of the Darvis boxes. So today, when we were sitting here and we made new highs, got a Darvis, but then you can start seeing boom, sell, and then from there, we just got crushed. And so that's something, the Darvis boxes are nice because they give you the levels and whether you're going to be stair-stepping up or stair-stepping down with buy and sell signals there. Okay, and that's something that I found that's very, very useful. Also, the grab candles and the wave give you a clear indication of where trends start and reverse. So example, for today on a 5-minute chart of the NASDAQ, you can see like, okay, great, we've got a lot of upside pressure here, but you get a very clear indication of when the trend is reversing. Okay, this is obviously hugely helpful for these intraday moves like that. That complements things like the tick, but it comes in there and really nails what is going on in the price action. From there, what I found is that futures respond very, very well to not only squeezes, but price signal turns, okay? And this tool right here automatically draws arrows at the specific price signal turns that we're looking for. This is a 15-minute chart of the NASDAQ futures. Today, we had a nice rally, but we had the NASDAQ futures petered out here, and from there, we actually gave up almost all of the gains that the NASDAQ made by the close. Those are the kind of things that are very simple and that the futures respond very well to. Now, I've got puts on Facebook, and what I did today too is I actually used the same thing. When I saw that we were getting the signal in the NASDAQ futures, I went and checked Facebook and said, wow, we're getting the same signal in Facebook here. I'm going to go ahead and add puts to my Facebook position. So this is what I mean when you can actually, if you understand to read the internals and you understand the signals that drive the futures markets, you can use that actually to leg into other positions that you're also trading in addition to the futures themselves. Okay. So so let me show you this real quick. I mentioned that we're going to do a class on Saturday. I'll give you the details, and then Raghee and I are going to stick around. I've got more slides I can show you, and we will answer any questions and stuff like that that you have. But I just want to, for those of you that want to do this with us, we are going to be doing a class that focuses on exactly kind of the stuff we talked about here. We're going to be focusing on internals, how to read them, basic day trading setups that we like to do. There's a couple of things that I like to do on Fridays where you can actually set up a no-risk trade in the futures, which is fantastic. So on Saturday, February 24th, if you're brand new to futures, don't worry. Neil's going to come on and do a newbie class for new folks. If you're new to futures, to kind of get you warmed up, that's an early session. And then when we start our regular session, Raghee and I for 4 hours are going to be going in depth into the internals and the setups that we like to use for futures. And for those of you that don't already have the Darvis box, that's also going to be thrown in there. If you do have it, not a big deal. This is just something where I know a couple people, most of you guys already have it, but if you don't, it'll be thrown in there. This part, we're also going to include 3 days of live trading. These are the classes that tend to always pay for themselves, or they have in the past. Obviously can't make any guarantees there. The futures and the way the markets have been going, it's something like this where even if you're just trading one contract, it offers a lot of possibility. So you do the Saturday class, you get the intro. We're going to be doing the live trading. You also get the grab and wave and this turning point indicator that I showed you. And we're going to be talking about the crash proof trading strategy, as well as all the different setups and all the different internals that we'll be doing. All right, so that's kind of the main thing. If you type in simplertrading.com/recipe. Now, for those of you that are interested, we also have a live event that's happening March 25th, 26th, and 27th. If you would like to go to the live event, you can. There are still a couple of seats left for that. It's $44.97. It would include the live event plus everything else. Or if you'd actually like to do the live event online with us, you can do, this is a pretty awesome package where this master one, where essentially you do the Saturday class, You get the live trading and those tools and everything with our live event without having to leave your house. And that's going to include, we've got a global macro discussion, we've got live trading session, we've got crypto sessions, Fibonacci sessions, voodoo sessions, option income sessions, mental toughness. We're bringing in a coach in to do that. And anyway, really cool stuff. So I just wanted to show you guys that real quick, and then we can dive in here and answer whatever questions you may have. And Raghee, if there's anything here that you wanted to dive in on as well, I just kind of want to make sure everybody kind of had a good sense of the class and everything like that. But you know, Raghee and I will be tag teaming the class. And it'll be a lot of fun. It's always fun working. It's my, you know, Raghee's my sister from another mother, so it's always fun and awesome working with her and knocking out this stuff. Do you trade options on futures, and how do they compare to stock options? So yes, Chris, I actually like options on futures. There are some trades I like to do each week, especially in the weekly S&P options. And for those of you that have never traded options on futures, essentially one options on futures contract covers one futures contract versus, you know, one stock options contract covers 100 shares of stock. But there's a lot of cool things that you can do with them. If you understand the basics of options and selling premium, the premium on futures options is actually very rich, much richer than on equities. Do you use the matrix in TradeStation to trade futures? So I actually trade futures on 3 platforms. So I trade them in TradeStation, and I actually really like the matrix in TradeStation. I trade them in Thinkorswim. I do not like the matrix in Thinkorswim, but I use Thinkorswim more for options on futures. And then Infinity is what I found is the best if you're day trading. It's the best platform out there for day trading. You get the best margins, it's the fastest, and so those are the 3 that I use. Yeah, and I've just started doing futures on Tastyworks too. So yeah, we'll be doing some trades on Tastyworks as well. How often do you find a day trading setup in futures per week? So every day there's a checklist that I review, which I'll be sharing in the Saturday class. But the first is the gap. So the opening gap is always a potential trade. From there are, and Neil's got some of these too, where there's always an interesting trade, like at the close of the European session. And with the tick charts, typically you're going to get, you know, I mean, you could get 10 to 15 trades a day if you wanted to, but I'm only interested in trades that are going to net at least 3 S&P points. And so I try to limit it to 2 or 3 if I'm going to be doing them. And it just depends on the day as well. To trade options on futures, do you need a futures account? So if you have, it depends on the broker that you have. So not all brokers allow options on futures. I know Thinkorswim does. I don't believe Tastyworks does yet, but they're trying to. Oh, in the next week or 2? Awesome. Okay. Any good books on trading futures? Actually, well, there's a couple of them out there. I mean, I do the second edition of Mastering the Trade, which is my book, that actually does cover a lot of futures. And it does cover like the mechanics of it and stuff like that too. And then, so my trading journey went like this. So I actually started off trading equity options. So I was, stocks and then equity options. And then I always heard of futures and I was scared of them. And then around, oh my gosh, it was like maybe 2004 or so, I started getting into futures. And I was very nervous at first because I'd heard all these horror stories and then I really got to like them. And so for a couple of years, I actually focused exclusively on futures, and mostly during 2004, 2005, the stock market was dead. So I was doing like currency futures, soybean futures, and stuff like that too. There's always volatility somewhere. And then today I do a mix where I'm doing, my perfect scenario is I'm swing options, and then I'm day trading futures. because they're just pretty clean. If there's any moves, it's been actually pretty quiet for a while until recently. So it's like, okay, yeah, let's start focusing more on this. Yeah, and we do actually have a futures trading service as well. Yeah, we'll talk and we'll kind of go through and talk about, for those of you that are joining us on the class, we're gonna, we'll talk about all that stuff. I mean, it's going to be a great class. For those of you that are new to futures, I think it's going to open up a lot of aha moments for you. If you've been trading futures for a while and really want to get a, there's going to be a big emphasis on the internals with checklists so that you can use them throughout the day. In some ways, just to kind of make your life a little bit easier. But there's a really good structure throughout the trading day for this stuff. So the class on Saturday, and this is my best guess, I believe that Neil will start his at 11 a.m. Central, and then Raghee and I will be going from about 12 to 4, probably longer, but that's what we're scheduled for. And then this will be during market hours, the regular session market hours on those days. It's a Tuesday, Wednesday, Friday, I think. Will it be similar to the A to Z futures class? So we did do a futures class. I think that was about 2 years ago. We had Tony and Neil. So this one, we're not obviously. This one is going to be a lot more emphasis on internals as well as Raghee setups. Plus, with the tick charts and things like that too. Yep. Okay. Perfect. Do you need a 6-monitor setup? It's interesting. So tomorrow after the close, I'm going to be I'm leaving on a jet plane, going to Phoenix. I've got 2 days of meetings, and I'm debating. I've got a laptop. I actually like when I travel trading on my laptop because it actually really forces me to narrow my focus. Whereas if I'm trading at the office or my home office or my country cabin office, I've got a 6-monitor setup with these huge 24-inch monitors. So 6 monitors are nice. I would say if you're serious about it, 4 is amazing. If I'm traveling on my laptop, I'll either have a laptop with 1 or 2 attached monitors. But when I'm traveling, I narrow my focus too. So if I have more monitors, I can look at more stuff. Yeah, and the master, I'm excited about this because a lot of the times the live event, you just have to come live. And so people that haven't been able to come live miss out on a lot. And to me, this is actually a really, if you're really into this, this is a really great opportunity here. I mean, you get so much with this, and it's going to cover, it's like the next 6 weeks. So you kind of have your next, you're trading for the next 6 weeks, and you'll be able to ask a lot of questions at the master if you want some refreshers from this. And so I think it's just going to be fantastic. Do you find setups on the ES or Euro around the overnight high? Yeah, so I do. I am a big fan of the Globex highs and lows. Now, before I had children, I actually would trade sometimes overnight. Like I'd be up late or I'd wake up and trade. I don't do that anymore simply because I just need the sleep. Like when you have kids and they wake you up, you're like, oh my God, I gotta actually pay attention. But there are, if things are going crazy or if it's a Sunday night, but I do like to, when I'm charting the future specifically, I do pay attention to those Globex highs and lows because they do act like magnets. How many how many futures trades do you do each day? It does depend on the day. The last couple of weeks has been a lot more than normal, and I anticipate that trend to continue. It depends if I feel like I need to hedge, depends if I feel like I need to be able to move quickly. Especially if I've got like 7 or 8, like say long option strategies on, I want to sit there with my, finger on the button to short the NASDAQ futures in case things go wrong. Because you know how hard it is to get out of 7 option trades at the same time if, the crap hits the fan. So things like that. And then plus with the ranges that we're now having in the NASDAQ and the S&Ps, even just trading a one lot, there's a lot of interesting opportunities there. The put call ratio, there is, it's not the same symbol, but I know it is on TOS as well. Yeah, cash sign PCALL. Do you have any suggestion to somebody always taking the wrong side, the wrong trade when trading live, but the right side when paper trading? Yeah, so actually, believe it or not, that's not an uncommon thing, because what happens when you're paper trading, and I don't mean to point you out specifically, this is for all human beings. When people are trading a demo, they have zero emotion tied into the trade. And when they have zero emotion tied in the trade, they're thinking more clearly and they manage better. When people start going to live money, all of a sudden they put a lot more pressure on themselves. And it's that pressure that actually caused them to make bad decisions. The pressure of, oh my God, I got to make money. Okay. And it's a really weird thing. But what I suggest is that really, when you're trading a demo account, really pay attention to how you feel inside. Okay. Because that feeling is what you want to take to when you start trading live money. It's that neutral feeling. It's like, okay, anything can happen. There's nothing to worry about here. It's just a demo account, right? And so then you try trading one lot. And then if you trade like, say, 10 lots and freak out, dial it down to 2 lots. And like, okay, that's actually closer to that demo feeling. And that's really all it is you've just got to, you're building up your intestinal fortitude so that you can trade real money under the same belief that you're trading a demo account. And how you can do that too is you get confident in setups like the ones Raghee and I are going to show you, as well as reading the internals, so you don't feel like it's like, oh my God, I'm always getting on the wrong side of the trade. So you do futures trades to primarily hedge your options trades. So not primarily. It is something that I like to know, like what my risk is, like, my total delta risk in options. So I'll always know, like, okay, in the back of my mind, if something hits the fan here, I can short 27 S&P contracts, right? But I like to do what I call more unique opportunities as well. Opening gaps are a good one. Doing the, trading the close. There's some interesting things there, or just squeezes that'll happen. So one thing I like to do is that if I'm long a bunch of options, okay, so here, I'll bring this over here. So if I'm long a bunch of call options, right, and and the market right now, of course, has been pretty volatile, but even back when it was not so volatile, let's get a more fair rendition of it here. Let's see, like, there was one not too long ago. I may have already passed it. Well, something like that. I mean, that's too extreme, but what I'll look at though is if I'm looking at, say, something like, okay, is there a squeeze setting up on a lower time frame? Like, okay, I've got, say, a bunch of call options and I'm looking at a 78-minute chart of the NASDAQ and it's like, okay, there's a squeeze setting up and, I think the trend is still higher, but I really don't want to hold through, a 50-point move down in the NASDAQ. So I'll short some NASDAQ futures, and then once it runs out of momentum, I'll just exit. So there's things like that you can do. So, I will look at that and stuff like that. And then it makes it, a little bit easier that way too. Makes it easier to hold on. Is there a market internal chart for gold or oil like the tick? So there is not. So the US stock indexes are unique in the world, okay? Other stock indexes do not have this either. However, what's nice is that when you learn to read the internals, then see what the correlations are that day. If the euro and stocks are highly correlated, guess what? Positive tick readings you can use on the euro, even though obviously they're based on the stock market. But if it's like, okay, wow, if the every time the S&Ps tick higher here, the euro rolls over. Well, guess what happens if you get a huge buy program hitting the S&Ps? You can either buy the S&Ps or just short the euro. And that's kind of fun. A little more advanced, but it gets kind of fun when you can do some stuff like that. All right. John, do you only trade with options? Aren't the spreads very large? Yeah, so part of why I like having futures is that when the volatility gets really crazy like this, and I'm trading the indexes, it's actually easier just to say, man, I'm shorting some NASDAQ futures here, as opposed to, trying to buy puts on Google or trying to buy puts on NDX, because the spreads are horrible on those things. You can really get taken to the cleaners. So John, I have a question. If I have 100K, is it enough capital to trade full time? Okay, so I'm going to give you an honest answer on that. Not that I wouldn't give you any other answer than that, but it's probably not what you expect to hear. So what I would say on something like that is, say you need to figure out how much money you need to make first to live on, right? So I don't know, what your situation is. Do you need $5 grand a month? Do you need 10 grand a month? But I would say that you need to prove to yourself that you can make it. So here's a story. Was when I was working full time, and I'd build up about the same thing. It was like $100,000 account. I'm like, cool. If I can make like 8 grand a month, I can quit my job. And so what happened is, when I quit my job, I suddenly got a lot, quote unquote, smarter, because now I could watch every tick. I could turn on, CNBC and see what Maria Bartiromo had to say. And what happened is, when I first started trading full time, is I overtraded. Okay. So first of all, I'd caution you on that. Overtrading is the first deadly sin of trading full time. And then secondly, just break it down. If you need 8,000 a month, and then just kind of realize, and I was like, okay, that's only 2,000 a week, and really check with yourself how much you're risking. Because all of a sudden, you don't really need to take a lot of risks to make that, right? And you just want to make sure that you have the emotional control to be able to do that. So I would just say, I would challenge is that, first, and I don't know how much free time you have while you're working, but, if you need to make 8 grand a month, can you make 8 grand a month while you're working full time? And I know it's not quite the same, but you can set up trades with the risk parameters and things like that too. But the biggest danger is that especially if you're newer to trading, is that you overtrade and you destroy your account. So I'm trying to scare you a little bit there, because that's the main enemy is going to be yourself. John, we found that scalping with options on the Qs didn't work when they cut the tick value in half. Same with when they cut the euro value in half, and we went to the SPY, and the spreads don't work for scalping, so we just trade futures contracts. Yeah, Michael, that's what I found too. As much as I would like to just say, like, okay, we're going down here, I'm going to buy some put contracts on the spiders. It's so much cleaner doing it in the futures. How do you control overtrading? So the first thing I would say is that if you think you succumb to overtrading, is that you limit yourself to 3 trades a day. And you just got to have the discipline to do it. So if you can only do 3 trades, like you're trading full time, right? And you're day trading, and you can only do 3 trades a day, what are you going to do? So what happens then is you just get pickier about your trades. Oh yeah, Infinity's risk system too. Yeah, and so Infinity Futures, and by the way, for those of you that need a futures broker, the best one that we've worked with is Patrick at Infinity Futures. Patrick, if you want to, you can post your email in here if you want. Or I don't know if it'll show up, but I can copy and paste it. But what they do is, a lot of the screenshots that I've shown have been Infinity. And what happens is that they can actually put day trading limits on your account to help you protect you from yourself. So you can say, like, you know what, if I hit $1,000 in losses, shut me down, and they will shut you down. They will actually liquidate your account and shut you down. So they're actually very good about, saving you from yourself, which is great. Yeah, there it is. p.zielbauer@infinity.com. So he's awesome. Yeah, and if you email him directly, he can set you up. I just copied and pasted that so everybody could see it. Yeah, so the class, yeah, a little different from the room, because I don't do a lot of futures trading in the room, because the purpose of the room is more, at least the one I'm in is options. We do have a futures room, so we'll be talking about that as well. But this is really just a chance just to we can all hang out together and really just zone in on internals and zone in on futures and really get a nice focused attention on that. And that's Patrick's email for Infinity Futures. So if I did 15 futures trades today, I should be done for the rest of the week. Yeah. Well, and think about that, AZ. I mean, seriously. Because I get it, but it's like if you look at those 15 trades, maybe there was 3 of them that were awesome, right? So I'm just obviously just making up stats there, but sometimes the need to trade can overpower, it can overpower prudence, for lack of a better term. How do you feel about folks who try to shadow trade you? I'm fine with it. It depends on the market, right? The thing about the S&Ps and the NASDAQ futures, we can all trade them together. We're not going to move that market. If we trade options on a thin stock, we're going to move that stock, but we're not going to move the futures. Oh, I love it, Grey Wolf. That's great. Yeah, Raghee, I don't know if you've got, and my apologies, Raghee, if you were trying to talk. I don't know if I kept on talking or not, but if there's anything you want to jump on, talk about, feel free, or if you're good.
No, man, you're doing awesome. I was just going to talk, just mention some of the questions that have come by about, what if you're not at your desk or what if you're not at the computer? Because, as day traders, there's kind of a at the helm feel to what we're doing. In other words, do I have to be glued to the computer? It depends on the time frame. What I like to share with people is there's an ebb and flow, and there's a calculation that I'll be sharing with you guys as to understanding when volatility increases, when it decreases, in the rhythm of the trading day. And it's those kind of things that help with shifting profit targets. Like I've got a trade right now in the NQ in the Asian session, and it's a very different price movement range expectation than I took earlier in the day with the example that John showed earlier during the US session. So no, you don't have to be glued to your computer, and you can pick and choose because futures are much more 24 hours, in terms of their movement, especially in energies, currencies, metals, indices than they were before. So as long as you know what kind of price movement range you're dealing with, there's a lot of flexibility, gang. So I got that question a few times. I just wanted to make sure I addressed that. And then in terms of, longer term trades, this is what I'll say about, we're focusing on the strategies of day trading. Nobody trades tick charts better than John. In fact, I'd say 80+% of what I know and do with tick charts came from John. And then in terms of internals, he reads those things like a master. So those kinds of understanding tick charts, understanding market internals, it's like having a dashboard for direction and velocity. So it absolutely gives you an edge. And then you start to throw that in with understanding elements of what certain indicators are telling you about whether or not a certain trade is triggering. And that's where you start to put it all together. So if it seems a little bit intimidating at first, let me mention, Neil is amazing at breaking down the basics of futures trading. So if right now your head's spinning a little bit, you're thinking, what are contract specs and what do I need to be able to trade a single contract, and what are the day trading rates? When we're doing the live trading, we're absolutely going to explain, all right, this is how much we need to put this trade on based upon the time of day. These are the point range values. We'll talk about that for sure as we're doing a lot of the live trading, and then in examples during the course, we'll break that down as well. But if you're swimming in this right now, you have the replay, check it out. And then, like I said, Neil's going to be doing a special session to give you a futures 101. So right before John and I go on to give you guys the strategies, the emphasis on on the strategies. Absolutely, Andre. Neil is awesome. And he demystifies this stuff like a champ. And he's actually also a very, very good intraday, amazing intraday trader. Some of you know things like sneaky foobar, and yeah, he's fantastic at the intraday nuances. So, John, I don't know if you have anything to chime in there, but I was just tackling some of the questions that I saw. And these are, as far as Forex, Bradley, I mean, if you wanted to do currencies, that's one of the main sectors that I look at. And you could trade futures currencies. And those of you that even want to use this to understand, what to do with Forex, that's fine. I mean, absolutely. One of the things that I think translates well are a lot of the indicators that I share and John share. Not all of them, but many of them translate over to nearly any market. Someone was asking me what my favorite setup was intraday, and one of my favorites is a combination of the automated support and resistance of Darvis, which in and of itself is magical. You add squeeze, you add some market internals, Yahtzee. I mean, that's probably one of my favorite bread and butter. And someone asked earlier, how do you keep from over trading? We're going to have that mental toughness, and we're going to talk about, what John and I and Neil do, especially during the live trading, to keep ourselves from over trading when the temptation is so great. But I gotta quote the Fib Queen, which is no trigger, no trade. And when we emphasize the strategies, there is a recipe and there is a process that you go through. And what I'll do, I'll show you what a conservative process looks like versus an aggressive process, so you can kind of fine tune this for the kind of trader you are. But again, no trigger, no trade. So if the criteria aren't met, like John was talking about the checklist earlier, right? I mean, I'm a scuba diver. It was my first business in college. And no diver goes, I'm going through my checklist, 8 out of 10 look great, and jump in the ocean. No way, right? So we go through that checklist, and that's the discipline part, right? That's the mental toughness, which is why we're going to have, that kind of information available to you. But if you have the checklist, that really is a big part of keeping you out of that over trading hot water. All right. John, you can tell me to put a sock in it any time, but I had a lot of questions about tick charts too. Go ahead, John.
No, I think that you actually, I think that's a good analogy of like, scuba diving. We were scuba diving in Cayman when we were just there, and the whole idea that, you want to make sure that, when you dive in the water and you're going to be 100 feet below, that, all your stuff's working properly, or bad things can happen. And, I think it's, being in a futures trade is not going to be the same as being 100 feet below by yourself and your air goes out, but it can be if you're not really paying attention. So I think if you take the same, caution, I always say when trading, be cautious and patient for your setup. When the setup gets there, you go for the kill, man. It's just like, be cautious in your approach, but aggressive in your execution. A lot of times it can be easy, just out of the sake of boredom or FOMO, fear of missing out, to be aggressive in your approach, and then you get in there and you don't know what to do, and that's not the process, right? So it's part of what we'll go through on Saturday, is just kind of like, all right, here's what we're looking for. I love Raghee's grab and go candles. I mean, those are things like that just kind of, I mean, the worst is that you sit there and, you buy the dead highs of the day and you're sitting there and you're just holding through this meltdown when you could have a simple tool that's screaming at you that the thing just reversed, right? So if you learn how to read the internals and you've got a couple of tools like that, it makes it so much easier. Because I remember the days when I was fighting the trend, and it is not fun. And just be very, very flexible, and you just kind of go with the flow. You do not impose your will on the market. Allow these checklists, allow the internals, and allow these setups to just, say like, okay, look, the odds are very, very high that this is what's going to happen now. So you just go with it. Yeah, exactly. FUBAR. I actually, last summer, I was down 50 feet and I went to Little Cayman, which is like an island of 100 people. And I went to this rinky-dink outfit. It was like 2 girls from Ireland, nice girls, and it was like 6 of us, but they're like, this is their summer job. They don't, they're not really too concerned, about the state of the equipment and stuff like that. And so I get under about 50 feet and I had an empty air tank and just ran out of air. And so I just, I had to make some decisions. I had to swim about 10 feet. I either had to swim 10 feet to grab a person or go 50 feet to the surface. The problem is if you go to the surface too fast, you get the bends, and that's not good. So, but if I went to that person and I couldn't like catch him in time, then it's like I'm screwed. But I went to that person and I motioned what was going on, and I got to borrow their air, and then they kind of walked me up. But that was a little hairy. But luckily, you're trained and you know what to do in that situation. Why are you no longer concerned about times like the flash crash and the Swiss franc disaster? Oh, I always think that there's something like that out there. I mean, I would say that the last 2 weeks have been very, very evident that anything can happen, kind of a thing. So so the best example I can give you of the Swiss franc disaster is that I know a lot of people that were short the Swiss franc without any concern that something bad may happen, and they got destroyed. They woke up down, to a $25,000 per contract loss. And so there are ways to hedge against that. And so one, what's nice is that, if I'm swing trading the S&Ps, or I'm concerned on an overnight risk, I can hedge with futures options, right? So there's always things like that you can do. And I for sure think there's always going to be black swan events that are out there. The key is always just fully understanding what is your max risk. So what's nice is when you're day trading, you can, if things are working out, you just get out. It's those overnight moves, those overnight announcements that can really hurt. Yeah, with an air, yeah, you got to get those deep breaths going for sure. Yeah, so guys, this will be, again, I'll just review it real quick. I think this is going to be great. I'm excited about this. This is kind of how I cut my teeth trading. So this is the kind of stuff that I always think is super fun to share. I think this is for many people the next evolution in literally just increasing and taking their skills to the next level, even if you don't trade futures. If you understand the internals and what causes the futures to move, you just gained an edge even on basic entry setups. Okay. So again, the Saturday class, which is kind of the the no-brainer here. And by the way, at 10 o'clock, Eric is going to come on and show you how to set up all the indicators. At 11 o'clock, these are bonus sessions. Neil's kind of going to give you a futures 101 primer. And then during the live trading class, he'll be teaching some of the setups. And then Raghee and I from 12 to 4, probably last longer, we'll be going over all our stuff. And you get a copy of that indicator. And the Elite includes all that, plus a couple more indicators, plus 3 days of live trading, which, especially this kind of stuff, that live trading is really going to help you hone it, take it home. And the master's fun because it's the first time we've done this where we've offered the online portion of our live event. So, it includes all of this as well. Plus this live event that we're going to do in Austin. It's our annual mastermind, which is almost sold out. We're going to allow people that would like to say, you know what, I'd actually like to go and I don't want to travel. Well, for $16.97, you can attend that plus this. And I think it's great. You can see all the really cool things that we're going to be doing during that 3 days. We're bringing in a mental trading toughness sports coach. I think that's going to be amazing in and of itself, and a lot of other things there. And then, of course, the live event includes that live. So I think it's going to be a lot of fun. It's going to be an action-packed week. We'll be focusing on the stock indexes. We'll trade other futures as well. We have a lot of cool setups to show you guys, other tools and stuff like that too. So yeah, Michael, and some of the stuff too, on some of the platforms, we're going to be talking about some of the order entry tools. On some setups that I do, I actually don't place a stop or target. I'll do this, I'll bracket it. I'll have a buy stop and a sell stop, and then I'll just do an MOC order, which is market on close. Okay, so if this one's hit, my sell stop becomes my stop, and then I get out at the close. Different things like that. Or you can set it up so that once you get in, you just have an auto trailing stop and you don't have to worry about it. So there's a lot of things that you can do with futures that you can't really do with options. And so it'll be fun to kind of dive into all that stuff. Dan, I think that's fine. I think sometimes I used to have 8 screens, so I've put it back to 6. But you can look at too much data. All right, guys. Cool, guys. We'll give you guys a copy of these slides. Again, the idea here is to kind of encourage, help out, give you guys some new info. And then for those of you that want to take a deep dive, you've got the information there. You can just type in simplertrading.com/recipe. If you have questions, you can give us a call here at 512-266-8659. Otherwise, looking forward to hanging out with you guys on Saturday and then doing the live trading, which is going to be a lot of fun. And it'll be great working with Raghee and Neil, just kind of diving in, doing a deep dive onto the futures there. All right. You guys have a fantastic evening. And for those in the room, we'll see you there tomorrow.